Hello, bonjour, and welcome everyone. My name is Tamir Maharaj. I'm a trade advisor here at the World Trade Center, Winnipeg. I'd like to begin today's webinar with our land acknowledgement. We acknowledge that we are gathered on the lands of Treaty 1 territory and that Manitoba is located on the traditional and ancestral lands of the Anishinaabe, Anishinaabe, Inuit, Innu, Dene, Suline, and Dakota Oyate nations. We acknowledge we are also on the homelands of the Red River Métis, and that northern Manitoba includes lands that were and are the ancestral lands of the Inuit. Centerport and the World Trade Center Winnipeg teams respect the treaties that were made on these territories and acknowledge the harms and mistakes of the past and present throughout our nation. Thank you for joining our webinar, Tariff Challenges, Understanding the Ever-Changing Landscape, which will be presented by Rhonda Galbraith and Samantha Krist from GHY International. Before we begin, I want to share a few housekeeping items. First, please send all your webinar questions directly in the chat box at the top of your screen, and we'll try to answer them at the end of the presentation in the Q&A section. For all logistical questions, also send them in the chat box and I'll answer your question as soon as possible. And you'll receive a PDF copy and recording of this presentation within the next week. Now it's time to start our webinar. I'd like to introduce you to Rhonda and Samantha. Rhonda Galbraith is the Director of Canadian Trade Services at GHY International. With over 30 years of experience, including her tenure as a Senior Trade Compliance Officer at the Canadian Border Service Agency, Rhonda brings deep expertise in valuation, tariff classification, and origin. She champions comprehensive 360 compliance reviews to ensure clients remain fully trade compliant. Samantha Krist is a client manager at GHY International with over 16 years of experience in the customs industry. She holds a certified customs specialist, certified trade compliance specialist, and a lean yellow belt certifications, reflecting her commitment to operational excellence. For the past 4 years at GHY, Samantha has taken a proactive approach to client success, making her a trusted partner to clients and colleagues alike. Welcome, Rhonda and Samantha. The floor is all yours.
Thank you. I'm just going to briefly go over our indemnity clause. The information that we're presenting today is, to the best of our knowledge, as of 12/02 on this date. Because of the trade climate, we know that things are changing on a regular basis, sometimes minute by minute, sometimes day by day. We all long for the time when it changed months at a time, not minutes at a time. So next slide, please. So we're going to talk about the overview of tariff challenges, trade compliance, the importance, financial resilience, and operational readiness. It's become a central issue for sure for international trade, particularly for Canadian businesses navigating cross-border commerce. The ever-changing landscape of trade regulations, including the imposition and removal of tariffs, demands constant vigilance and adaptability. Again, I've been in the industry a very long time and I've never seen it. I was saying turbulent. I've never seen it this volatile before. So the presentation is going to introduce key areas that are affected by the tariff changes, including, again, tariff trade compliance, financial resilience, and operational readiness. It set the stage for comprehensive exploration of how businesses can protect themselves, optimize performance, and move forward with confidence. Again, I'm using that volatile trade environment. Businesses must stay vigilant with evolving regulations to ensure compliance and avoiding penalties. And again, we're here to help. And next slide, please. So briefly, our agenda, we're going to talk about trade compliance, DeMinimis thresholds, valuation principles, CUSMA strategies, origin and tariff classification, financial resilience, the impact analysis, try to be as ready as you can, and again, that ever-changing environment. Workforce development, technologically integration and supply chain adaptations. We're going to briefly touch on steel and aluminum tariffs. They're a very hot topic right now. The current landscape, or And we're going to go over some examples, real life examples and strategic recommendations. So our first topic is the trade compliance. De minimis. So for those of you that don't know what de minimis is, it is the threshold that it's a minimum threshold that you can import into a country without duties and taxes. So it's usually an impact on small shipments. Our slide you're going to see that says currently $800 in the US. And some of you are going to go, no, it's not, that stopped. It actually hasn't stopped, it's been suspended. So once the one big beautiful bill comes into effect that was signed July 4th of 2025, it will be permanently eliminated in July of 2027, July 1st of 2027. So those are the changes that it's impacting. So not only is it impacting shippers, it's impacting the people that are receiving the goods and supply chain and everybody who's along that pathway, right? From importing goods, I go online, I purchase something, I get it at my door, everybody's happy. Now that's not the case. Valuation. So this, I'm holding my heart. I love valuation. So valuation is really, really important right now. We want to make sure that it's right. And when I talk about compliance, I don't talk about it as just you're at risk. It's also about you getting it right so that you're not overpaying. So compliance is a positive and a negative. It's not just, oh, CBSA or CBP is going to come and give me a penalty. Well, they will, but that's not what we're talking about when we're looking at compliance. It's a global view of compliance. And 100% of the time, if I was to do a valuation audit, I could find an error. That's when I worked at CBSA. I don't do that anymore. But when I did do it, 100% of the time you could find an error. Valuation principles are extremely complex. So approximately 95% of all transactions are based on a transaction value, which is based on price paid or payable. So Sam and I'm selling to Sam. She places an order. I get money. I send her the goods. Everybody's happy. That's price paid or payable. That's a transaction value. So if you're delivering your goods delivered, duty paid, which is all in. So Sam places an order to me, right? And I'm saying, here, Sam, I'm going to send you your good. You're not going to have to deal with those nasty people at customs. I'm going to take care of everything for you. I'm going to deal with your broker. I'm going to deal with freight. I'm going to deal with CBP or CBSA as the case may be. There's certain deductions from that price. So there'll be a price to Sam and there'll be a price for customs purposes. So you want to make sure that you're taking allowable deductions. Next slide. Thank you. Okay, CUSMA. Again, we want to make sure we're compliant with CUSMA. If there's a free trade agreement that is applicable, you want to make sure that you're taking advantage of it. We don't want to be giving the government on any side of the border money that we don't have to give them, right? So you want to make sure you're compliant. You want to make sure your certification is compliant and that you understand the product specific rules. So for CUSMA, there's rules for Canada, US, and Mexico. And then the US has additional rules. So you want to make sure that if you're shipping goods to the US that you're following those. We are witnessing, and CBSA has announced, and CBP has announced that they are looking for higher enforcement rates. CBSA has announced they are hiring 1,000 new officers, and we can expect to see a spike in verifications. Failure to comply can result in significant financial penalties. Penalties are higher in the US than in Canada. We're a kinder, gentler enforcement agency, but nonetheless, you don't want to be paying any penalties. Companies are advised to conduct regular audits, maintain detailed records, and consult trade experts to navigate the complexities of origin. Comprehensive documentation of the inputs of your cost of goods sold will make other requirements easier to follow. One other thing that's become a requirement that wasn't a requirement in the past is country of melt and pour and country of smelt and cast for aluminum. And the value of those metals in accounting for steel and aluminum derivatives are for goods going into the US market.
Another really important part of it is origin. So determining where the goods are made is crucial for applying correct tariff rates and tariff preferences. So Canada does have 15 free trade agreements with 51 different countries. We like to trade with everybody. We want to be friends with everybody. CUSMA is the forefront of everyone's mind, or USMCA. It is important to be aware of all agreements that and all agreements and the countries that we are covered with under FTA, which is free trade agreements. So in this example here, you see there's some gloves on this screen. Gloves were imported and accounted for under most favored nation, which attracts 13% duty. However, if they were imported from a country such as Cambodia or Pakistan, then that would benefit from general preferential tariff, and the rate of duty for that would be 8%. So you'd be saving a lot there if you were just declaring the correct country of origin. So tariff classification as well is very important. In this example, we are talking about hip waders coming from China. So originally the client was importing hip waders as PVC and waterproof boots from China. So they were classifying it as Chapter 39, so 39 and 2620, which is plastics and articles thereof, with the expected duty rate of 6.5%. CBSA determined hip waders are footwear, not plastic articles. Therefore, they classified it as 640110 or 640120 with waterproof footwear, which the actual duty rate for that was 17.5%, resulting in a higher landed cost than expected. So the classification issue here was obviously it was classified incorrectly. The importer attempted a lower duty rate and it was denied by CBSA. So the impact to the client was increased duty from 6.5 to 17.5, which is a huge financial hit, especially when CBSA goes back a couple years. In this case that we're talking about here, the client was compliant, but if there's a scenario where the client is not compliant, they would be hit with penalties as well. So, which is another huge financial hit to the importer. So things to remember, classification must reflect essential character and use, not just material. Misclassification can trigger significant duties and penalties. Be aware of binding rules and classification audits to reduce the risk of inaccurate classification to ensure predictable landed costs. So the next thing that we're going to go into is financial resilience. So impacts of tariff on financial planning. So tariffs introduced unpredictability in financial planning. They affect cost structures, pricing strategies, and cash flow. Businesses should try to incorporate tariff scenarios into budgeting. They can also use forecasting models to anticipate potential impacts. Even though it's challenging, it's necessary. I know all of you are thinking easier said than done, Sam. How do we do this? So we do have some ideas, like your risk mitigation strategies include diversifying suppliers and customers, renegotiating any contracts that you currently have, and adjusting pricing to maintain margins. With the uncertainty around whether the tariffs on goods will be overturned or allowable refunds will continue, it is important now, more now than ever, to stay informed. Companies should build financial resilience. They should explore options to mitigate that risk and maintain financial flexibility to absorb shocks like we've seen over the past year and continue to ensure operations without compromising profitability. So risk mitigation, I talked about in the last screen, and contingency planning. So effective risk mitigation involves identifying tariff-related vulnerabilities and developing contingency plans. This could include scenario planning for supply chain disruptions, establishing reserve funds, and leveraging trade financial solutions. Businesses should assess their exposure to tariff changes across all different markets and products and implement controls to monitor and respond to policy shifts. Engaging with your customs broker is really important, and maybe even your trade consultant. These things can provide the best insights and help get you through this. By proactively communicating with them, they can suggest best practices and help help with lowering the risk. Implementing monitoring controls such as internal audits to ensure compliance with policy shifts and respond promptly to changes in tariff exposure. Anything to add to that?
Well, the only thing I have to add is, it's very easy, as Sam said. So just to punctuate what she said in one of the earlier slides is, oh, just do this. It's easier said than done when it's a moving target, right? Canada, we have the benefit of a bit of time before they implement a change to tariff or any other trade changes. Where in the US, it's literally signed sometimes at 6 o'clock at night and it's implemented midnight of that same evening, right?
Yeah.
So it's difficult to prepare. In Canada, we do have a bit of luxury, but not always. So
yeah.
So we're telling you to prepare. Just do your best, guys. Do your best.
Yeah. It's just really important to monitor policy changes closely and just communicate with your customs broker or your trade consultant. Yeah. So we're going to go into operational readiness.
Yeah. So integrating technology and developing a skilled workforce are essential. Digital tools support tariff classification, origin determination, and documentation management while freeing up staff to focus on the complex issues and compliance accuracy. So again, I mean, all of this is common sense, and I'm sure everybody in business knows all these things, but now it's just more important than ever. Automation reduces errors and speeds up processes, while analytics provide insights into performance and risks. Training programs ensure that employees understand compliance requirements and can adapt to changes. Cross-functional teams enhance coordination and decision-making. Investing in technology and human capital builds a robust operational framework capable of navigating complex trade challenges. So just to go back to what Sam said, make sure you're talking to your broker, make sure you're using the tools available, whether that be a human tool or a digital tool. Operational readiness requires agile supply chains that respond to tariff changes. Businesses must evaluate their sourcing strategies, consider alternative suppliers, and optimize logistics to reduce costs. So sometimes that's, again, easier said than done, right? Inventory management plays a crucial role with just-in-time and safety stock models offering different advantages. Agility is key, and no solution will be permanent, especially today. As we'll be seeing later, Canada announced surtaxes on steel only from non-free trade partners, but exempting anyone who we have a free trade with. Less than a month later, we extended those surtaxes to everyone with the exception of CUSMA partners and applied to aluminum products as well. So again, that moving target, right? It's hard to plan when we don't know what we're shooting at. Technology solutions, including ERP systems and trade compliance software, enhance visibility and control. Having a strong relationship with your customs broker has become more important at this time due to the volatile trade landscape. Just a quick story about my children. Not that anybody needs to hear this story, but for my entire career, they didn't really know what I did. And now all of a sudden, they know what I do. They know what I do for a living. I'm so excited. Training staff on compliance procedures and maintaining open communication with partners and your broker ensures smooth operations. A resilient supply chain minimizes disruptions and supports business continuity.
I feel anybody can support you in that parent thing, right? With yeah. My 9-year-old was arguing with her teacher about something, and I was like, "Oh, I'm proud of you. You know what I do." Rhonda touched a little bit on the steel tariffs, but we're just going to talk about it a little bit more. So as you know, this year, steel tariffs were introduced with the U.S. imposing 50% duties under Section 232, and then Canada responded with its own measures. Canada went and introduced the tariff rate quota and surtaxes on steel from non-FTA partners. But like she said on the last screen, they originally said one thing, and then they changed it quickly to the non-FTA partners. They are aiming to protect domestic producers, then quickly slash those quotas in half and impose tariff rate quotas on everyone but the US and Mexico. These policies affect industries such as manufacturing, construction, and automotive, leading to increased costs and sourcing challenges, as anybody that's importing steel probably is still not 100% sure what they're doing at this time or how they're being impacted. So businesses must understand the origin rules, manage import permits, and monitor quota allocations. The steel market remains volatile at this point, and companies must stay informed to avoid penalties and supply disruptions. So again, I hate to sound like a broken record, but just make sure you have that really good relationship with your customs broker. They'll hopefully guide you through this.
So a skate is a skate is a skate until it's not. So we are going to talk about roller skates. I guess the roller blades, they're not called skates anymore. I'm aging myself. And ice skates. So the blade or the bracket of a roller skate, whatever it's called. Roller skates.
It's still roller skates in the tariff, right?
Correct.
That's
okay,
why.
I'm gonna say that roller skate would be subject to aluminum tariff. Well, the steel blade of the ice skate is not subject. So I'll let Sam do the last part of this.
Yeah, what if the ice skate had an aluminum blade? Okay, not that, sorry. Not for the example for the sake of this example. So normally that won't happen, but for the sake of this example, let's say it does have an
right.
Yeah.
Your ice skate has an aluminum blade.
Correct.
So then what would happen?
So the ice skate would not be subject to aluminum tariff. Why? Because the ice skate tariff classification is not included in the aluminum tariff list. So what you see up on the screen here, 9506 is not on the impacted list for tariffs.
So not only do you have to know whether your goods have steel and aluminum and the value of the steel and the aluminum, you also need to know the tariff classification of that good and whether the steel and aluminum tariff and derivatives applies to that particular good.
I think it's important to mention that's when coming into Canada or
US.
Yeah, so
this is not going to US.
That's what I wanted to say. Is it both, or are the rules the same for both?
Right. And we've actually had to update the slide because at one point in time it was 25% and now it's 50% as of this time, and maybe something change again.
It might be changing while we're speaking, but hopefully not. So strategies for navigating tariffs. I know I said, have that relationship with your customs brokers. What if you wanted some things on your own? So, oh shoot, sorry. What did I do? There we go. Okay. So to manage the impact of tariffs, businesses should start by exploring alternate sourcing options and negotiating those contracts. This will help reduce tariff exposure and ensure supply stability. Compliance is crucial. Understanding melt and pour requirements and securing shipment-specific permits is key. Remember that the melt and pour is not always the same as the country of origin. So having mail certificates or CUSMA USMCA documentation ready is essential. Collaboration matters. So stay connected with industry associations, your customs broker, your trade trade consultant for updates and policy changes. Strategic planning and strong supplier relationships will help mitigate risk and keep you competitive. Don't overlook duty drawback opportunities. If goods are imported for re-export or were used in products that will be re-exported, you may be eligible for refund on duties and surtax. Finally, examine your supply chain and manufacturing processes. Direct overseas purchases can prevent double payment, and further manufacturing may move goods into exempt tariff categories or reduce exposure to steel and aluminum if possible. By taking these steps, you can prevent your margins and maintain operational resilience in a challenging trade environment that we're in right now. So I know you saw that a second ago, but so we're going to OIC remissions.
So OS3 emission orders can provide significant relief for surtaxes, especially for goods used in that meet certain criteria in manufacturing, public health, and national security sectors. To take advantage of it, businesses need to conform to eligibility based on sector and usage and have the right documentation ready, such as certificates and invoices. If you are applying for your OIC as a refund, CBSA is requesting source documentation to prove that you are an actual manufacturer or you are in the public health or national security sector. Application process runs through CBSA and in some cases may involve consultation with the Department of Finance for approval. So that is the ones that are OIC remission outside. The remission order in Customs Notice 2519, the benefits go beyond compliance. Remission orders can deliver financial relief and support strategic planning, helping businesses stay competitive again in this challenging trade environment. Successful remission applications require thorough preparation and understanding of the criteria. Businesses should maintain detailed records of imports, usage, and compliance history. Using the correct OIC codes and submitting claims with specific timeframes are essential. Retroactive claims are possible, offering opportunities to recover previously paid surtaxes. Consulting again with your customs broker enhances the likelihood of approval. Remission orders can significantly reduce costs, and currently the Canadian remission order is in effect until December 16th. So the original order was signed until October 16th, and then I believe it was the 18th they extended it. So those 2 days it was we were waiting with bated breath to see what the decision was going to be, and it was extended to December 16th.
Mm-hmm.
So we have some case studies for you.
So the first one, supply chain restructuring. So a mid-sized importer adapts to de minimis changes. So the previous model, a single shipment from Canada to the US customer valued under $800, exempted from formal customs entry requirements. The new reality in 2025, de minimis threshold changes requiring formal entries, duty payments, and enhanced documentation for previously exempt shipments. And then strategic response, consolidated shipments to the US warehouse, implemented batch processing, and leveraged technology for efficient customs clearance and compliance. So this restructuring reduced per unit clearance cost by 40% while maintaining delivery times and customer satisfaction levels. I think it would save money by avoiding financial clearance or individual clearances as well, right?
So for every clearance, right, you're going to be paying your broker a fee. So if you do one clearance with 1,000 shipments as opposed to 1,000 individual shipments now, you're going to save money. Well, you should save money. You will. You should.
Yeah. You can go ahead and do this one.
So we have a company that is Maple Origin manufactures office filing cabinets using steel from both China and the US. So previously, it didn't matter where you source your steel from, because if it went through a transformation from a steel good into a new good, it met a transformation through the rule of origin, and it now became a Canadian good being exported into the US. Mm-hmm. But now, if we are commingling Chinese steel, Canadian steel, European steel into a product, we have to, for the US legislation, we have to pull out the steel derivative, and we have to say where it's from, and we also have to say the value of that steel. Yeah. So it's much more complex now. I'm not just making a, what was I making? I was making an office filing cabinet. I'm not just making that anymore. We have to have, and meeting the rule of origin, we have to pull out country, melt, pour, and the value of the steel derivative.
Yeah. So in the solution?
Oh, sorry. Implement inventory segregation by steel origin, calculate and document steel values, input values separately, use US origin steel exclusively for US exports to achieve duty-free status. So just something to be mindful of when we're talking about the valuation of the steel. It's not the value that Rhonda, as the office file cabinet manufacturer, paid for the steel. It's the value of the steel, the selling price of that steel if I was to sell it to Sam. So it's the value of my filing cabinet. If I manufacture it for $100 and I sell it to her for $1,000, it's the value of the steel at the $1,000 amount. So it's not an easy math calculation.
I feel like this one really hits home for a lot of people right now, obviously. But they would say have a warehouse and just bring in the steel and put it in a pile. These are steel strips, squares, whatever we're calling them. And now they want to send something to the US and now they find themselves questioning, well, where was this sourced, right?
Yeah.
So,
Milling was not an issue before.
yeah. So this last one, case study. So US manufacturer Eagle Soar. So we're going to be optimizing disruption strategies for tariff mitigation. The situation is they produce oil and gas drilling tubing using steel from China and Canada, and also imports finished tubing from France. They serve both domestic and Canadian customers. So the Canadian tariff structure, 50% surtax removal with quota permits, plus 25% on Chinese melted steel. The U.S. origin product is exempted from both measures. USMCA qualifications, their manufactured goods qualify as USMCA originating, but Section 232 exempts only apply to U.S. origin products regardless of USMCA status. So strategic distribution, ship domestically manufactured tubing to Canada, duty-free as U.S. origin, and then sell the French imports domestically to avoid the Canadian surtaxes. So the outcome, this disruption strategy minimizes end user costs across both markets while maintaining competitive pricing and maximizing profit margins. So outlook and strategic recommendations. So the future of tariffs remain uncertain with geopolitical tensions and trade negotiations influencing policy shifts. Businesses should monitor developments, engage with trade associations, and participate in consultations. Strategic recommendations include investing in compliance infrastructure, diversifying market and building financial buffers, preparing for change to ensure resilience and position companies to capitalize on emerging opportunities. Staying informed and proactive is key to thriving in the ever-changing trade landscape. I pretty much summed up all that, right? Anything to add there?
No, I think we're good.
Perfect. So now we'll turn it over for questions. Samir, do you want to read the questions? Okay, you got it.
Yeah, I will wait for some people to put some questions in the chat. I had a question too. If you guys had any good recommendations for any tools or resources for looking at different tariffs in different markets.
Yeah, so we have the GHY classify tool. We can't do show and tell right now, but if you want to reach out to us, to Sam or myself, we can help you navigate that. Again, you can contact your association and ask whatever association it is, whether it's aerospace or health or whatever it is. If they have information on classification. Another tool is CBP post rulings. It's called Cross, CBP Cross. If you ask for a ruling in the US, every single one of them is posted publicly. So there's that. Canada, you have a choice whether you want your ruling posted or not. So there's much fewer rulings on CBSA's website under advanced rulings, but those are legally binding rulings. So they're a good resource if you find whatever it is that you're trying to classify on any of those.
We also offer like a newsletter with up-to-date when things change, the Trade Insights. So you can go to our website and sign up for that. You don't have to be a client of ours. You can be anyone, just sign up for that. Yeah. Those
Perfect.
are the only three I can think of, or we can think of.
And contact your customers.
There you go. Yeah.
Because we've only said that three times, 4 times.
Yes.
We have a question here in chat. Could you please tell me more about the Eagle Soars study?
Okay, let's just
Go back to that
back
one.
the Eagle source.
That's not one more. Sorry. So the example was importing tubing using steel from China and Canada. So what we were saying in this one is if you have steel that would be tariffed going into the US, it's probably smarter to use that domestically within Canada, or the other way around. If you have it in the US, use it domestically, and if you're shipping to Canada, then use the stuff that is not tariffed.
Right.
I got a next question as well. We ship to the US and have done so for years. They are generally not large shipments, so we ship through UPS World Ship. We have no idea what kind of tariffs are being applied to the customer. We've tried to contact a broker, but have been told that they do not take on small shipments. Any insight as to who to contact to make sure we are doing things correctly?
Have you reached out to the customer to find out what they're being charged, and then basically calculate it yourself based on the current legislation? Would be my approach first of all.
And as a customs broker, I would say like this, because of the trade that's going on right now in the US, this is reality for a lot of brokers. So maybe ask your customs broker if they have an alternate solution for somebody that would be willing to take on that those small shipments. I know we are working very closely with another US broker to take on small shipments like that. So I would assume that all other brokerage companies have something in place like that. So just maybe ask the right question of if they have anybody that they can recommend you to go to.
Yeah, and I guess my other question is if the customer usually accounts for the goods, or if you're usually accounting for the goods, right?
Yeah.
If the customer's usually accounting for the goods, then they should have that information. And if the answer that Sam gave you is if you were going to be accounting for the goods as a non-resident importer.
Fair, yeah.
So it depends on who's accounting for the goods to CBP.
I had another kind of follow-up question to that. If a company is expanding into a new market, let's say not the US, and they're looking for a customs broker in that market, do you have any kind of like vetting questions or red flags to look out for when picking a broker?
Very good.
Yeah,
That's a very good question. Again, I guess it would depend on which market it is.
Yeah.
How long they've been in, like all sorts of things, right? How long they've been in business for, what kind of relationship they have.
How many shipments are going to be going? Because is it a small one-time import, or is it going to be a lot more than that?
The amount of risk, the amount of information they can share with you at the beginning when you're first reaching out to them.
Yeah, and then what are your expectations, right? Make sure whoever you're wanting to work with can meet those expectations.
Thank you. See if there's any more questions that come in here.
We'll go to the next slide, maybe.
Is there any more questions? If not, we'll go to our next slide.
I think we might be no questions for now.
Okay, perfect. Thank you.
So at GHY, we understand that navigating international trade compliance is more about than managing regulation. It's about turning complexity into opportunity. So our team provides expert guidance, proactive solutions, and personalized support to help you manage changing tariffs, duty drawback programs, supply chain optimization, and customs compliance. You want to read the last part?
Combining deep industry expertise with advanced technology, we deliver solutions that by both compliance and competitive advantage, built on accessibility, responsiveness, and a shared commitment to your success.
So pretty much like we were saying the whole time, just have a really good relationship with your customs broker. We are here for you if you need anything.
Yeah.
All right. Well, thank you everyone who joined today's webinar. Thank you, Rhonda and Samantha, for the insightful presentation. Stay tuned for our more events in 2026, and we'll hopefully see you again soon. So have a good rest of your day.
Thank you, everybody.